Hi everyone, hope you're all doing well, and today I'm doing my US stock market portfolio review. So I'm going to go through my US stock market portfolio and show you how it is all going, as you probably guess, with what it's been like in the last few months. Well, in particular, the last 3 months, it has been hit hard, and I'll show you that today, guys. I'll show you that I'm not just saying these things, and I got, when you guys are feeling the pain, I'm feeling the pain as well, and just be transparent about that. I've always shared my portfolio with you guys on YouTube, and it's very easy to kind of share that portfolio on YouTube when everything's going up or we're in bull markets, but obviously when it's going down, I think it's also very important to share that when everything's going down as well. And I'm sure that you will notice or seen that there's not too many people sharing their portfolio on the YouTube scene while we're going on this big massive dip at the moment. And sorry if that email was very loud, by the way. I forgot to turn my speakers off on my computer. But yeah, we'll go through this and just kind of keep that transparency up so you know what's going on, just to know that I've got stocks that are down a fair bit at the moment. And like I said, with the correction, with the crash that we've been going on, I don't think you'll see many people showing their portfolio as well. I only do this on the YouTube every 3 months. If you do want a more of a monthly update, that's on the Patreon. So every month on the Patreon I share where my UK and US portfolio is at, as well as my buy and sell in real time. So if you do want to join that, link is in the description. And on this channel we're not any kind of emotional sellers. We plan for long term. We don't suddenly sell out after a day before saying that I'm buying so and so. Shout out to Meet Kevin there. And we're going to take a look at how everything's doing. So just looking back on the last time I updated my portfolio on the YouTube channel, which was October time, so the next one will be in a couple of months time on the YouTube side of it. A lot has changed. Not really with the stocks, because obviously the stocks are the same because I believe in them for the next 2 to 5 years. So you won't see that many stock changes in my portfolio. The difference is that how much I was up and down on a lot of these positions, and particularly up on the positions. A lot of them aren't like that anymore. Like Walt Disney, that's moving in the wrong direction. Alibaba, Dropbox as well. Facebook's had a bit of a pullback. Gang as well has had a massive fall off at the moment, as a lot of the gambling players have done. Not much has changed actually with Hugh. Microsoft's had a bit of a pullback. Pinterest, last time I did my stock market portfolio, Pinterest was up 113%. When I show you in a second, it's actually down, which is absolutely crazy. So that kind of shows you to the extent that that's kind of pullback. And if I just flick on to last time I updated you with my trading 212 side, the big changes here, Beyond Meat's been stung quite a fair bit. DraftKings, last time I did an update in DraftKings 3 months ago, it was pretty much flat. I was flat on that position, and within 3 months, boom, that stock has absolutely tanked, which is absolutely nuts. InMode up 406%. When I show you that in a second, that's only up 100% or something now. Shopify, that's been absolutely tanked. Skills weren't doing that well anyway previously, but yeah, the only difference from the last time I did this update with you guys is this position isn't in the portfolio anymore, which is Tesla. I sold Tesla just short of 100% return, so obviously that's the really important thing. It does kind of, this big drop that we've had recently, it does kind of show that it's never too bad to take some profit off the table and trim a few positions, or that when you are up on positions, you're here to make money. And I think it's one of those reality checks that if I didn't really sell Tesla when it was up a crazy amount, I wouldn't have had that benefit of selling that stock and being able to buy some of the dips anyway. So we'll take a look at how my portfolio is doing at the moment. So this is currently the Giro portfolio. You can see Alibaba is currently down 35% at the moment. We've got Carnival down 31%. That's my Alibaba position is the one that I've held in this portfolio for about 4 years now. And I started buying this in the Chinese dip last time in 2018. I sold half of my position out in 2020 for about 100% return, and I held the rest of the shares because I still thought Alibaba would do well, but clearly Chinese stocks have come under a lot of heat again since then, and now it's down 35%. I have been buying more Alibaba, but just not in this portfolio. And then I've got Carnival, that's a stock that I've held for 4 years now. Only with that one, it was doing okay, bought as a bit of a dividend stock, but then obviously the CV situation hit, so obviously that hasn't done that well. And then Celsius is a new position, so this is a position that I've started in the last 3 months, currently down 37% on that one. And then I've got some Dropbox, which I've held for, I think, 4 years-ish, three years-ish. Yeah, up 23% on this one. This was only a few months ago. Once again, a stock that was up 40-50% on this one, so this has had a major pullback. Facebook up 78%. I mean, last time I did this was up 100%. I've held that stock for like 4 years-ish now. So yeah, I one of the stocks that will probably be in the portfolio for a long time. Like, obviously this shows my current holdings, it doesn't show any of the stocks that are being sold, and I've only ever sold one stock at a loss, and everything else has been sold for profit. So like Tesla, that will never appear in the series anymore, but don't forget as well, like obviously there's been a few sold for profit as well over the last few years. Gang down 51%. This has absolutely tanked. Like I said, from last time when I did the portfolio update, and it was down 11%. This shows you like what happened in 3 months. It's just absolutely tanked, and it's one of those that's a bit frustrating, gang, because normally I build positions over like a 12-month period, and normally 12 months is enough to kind of counteract any dips, or give you the dips to kind of buy a good average, which I thought I had at around not 14 but like $16. I thought that was a pretty decent average for Gang, and then it's just boom, it's gone even lower, down $7. And it's also very hard to predict because Gang's actually had a very good year as well, so if anything, Gang probably deserves to be like up on this, not down 51%. So it's a bit frustrating because it just hasn't worked out on timing wise. Ideally you would always love to only be down a little bit on positions, but for whatever reason, small caps, growth stocks, gambling stocks in particular have been absolutely smashed. But yeah, even though I'm down on that one, I've not really got too much panic on it, because as long as it carries on doing what it's doing, I'm sure Gang will recover it, and I still will make a very good money on it. Like I said, I'm quite kind of fully allocated on that one, so I don't want to commit too much more cash to it. But I potentially could. The only way that I would potentially add more shares into the Gang position is that I see them still moving in the right direction. So if Q4 and say Q1, for example, we still see revenue growing a huge amount, and then they also start sneaking into profitability now, that would give me more confidence to just buy a bit more. So yeah, Huya down 53% on that one. I don't think I would be able to buy any more Huya, just because it's just got too much allocation for a Chinese company now. So even if Huya started doing even more impressive financials, I don't think I'd buy just for that reason. At some point you've got to have a cut-off point, I guess, and I guess mine is nearly there with Huya compared to Gang. But yeah, Huya, even though that's been absolutely stung, and as all Chinese stocks have, I'm not really selling out of it because the company's still performing very well, and I think it will still do well in the future. JD.com up 238%. I've been thinking about buying a bit more shares in this one. Since I bought this one around about 4 years ago, it's one of the stocks that I've never really sold because I think I got a really good price on it, and I think it still has many great things coming in the future. So I have sold some of my position off, but I still want to keep some because I think it's a fantastic company in the next like 5 years. Maybe buy some more, might average up on that one, we'll see. Microsoft up 158%. That's just one that I'll probably keep forever, just because it's such a great company. Even if it is a rich valuation and it might have a pullback, I'm just very happy to just keep it in there, a bit of a steady holding. We'll pay you a bit of a dividend. Pinterest up 3%. This is crazy. Like when I just popped back to this video, last time I did this update, it was up 113%. It's had a massive pullback. But Pinterest, I have sold some of it off at the start of the year, I believe it was. I sold a good half of my position off in Pinterest. I booked in about a 200-300% return on that one. And as well as that, the reason why it's probably down as much is because I did start averaging up on Pinterest. So yeah, I'm trying to average up on that one a little bit because I do still like it. T-Doc down 41%. Same again, it is a bit frustrating to be down 41% on this one, but you can't exactly time the bottom of the stock market. And realistically, when you do look onto the valuation side of it, and then you also consider that Teladoc is now, the priced pre-pandemic and the benefit it has got from that. Yeah, it sucks to be down like 41% on that one, but I still got loads of confidence in it, and it's very hard to predict share price movements like that. So yeah, I think that it only takes a couple of stocks like Teladoc, for example. It only takes them to growth stocks and small caps to come back into favour, which they haven't been for the last 3 months. It only takes them a week, 2 week of, a pretty good run, a quick jump of 20%, and then it doesn't look as bad. And that's the thing, these things can change so quickly. They change so quickly moving down, but they also can change very quickly going up as well. So not too panic about that. Still happy there with that one. That's a pretty new position though. I think I've only had TDoc for about 6 months now, so I could still buy a few more shares in that one. Visa up 21%. That's just a steady hold in the portfolio. The likes of a Microsoft, for example, or Facebook, and then Walt Disney, which is down 10%. I have been buying some Disney, but it has all been. It actually hasn't. I've been buying some Disney in this account, so I won't mind buying a bit more Disney if I can. So yeah, overall, like my thoughts on that one. Carnival's the only one that I don't really like as much on this portfolio, and I probably will sell when I get to break even. But all the other ones I'm really happy in. I generally might try buy, in this account, I might buy, that Celsius position might get slightly bigger. Gang potentially, but probably not for a couple of months. JD.com might be an average up. Pinterest I might average up a bit more on, or if you can say averaging up on that one anymore. TDoc I might buy at some point, but probably for not a little bit. Visa I'm pretty happy with. Disney's one that I might buy a bit more of at the moment. It's just the money side of it at the moment. There's a lot to buy and so little money, so it depends which one's in there exactly. But those are the ones that are definitely a lot more interesting to me at the moment. And going into my trading 2 and 2 portfolio, we'll start from the top. This is Alibaba again, down 30%. This is the one that I've been buying a bit more in rather than the other portfolio. Beyond Meat down 42%. Obviously that's been hit really hard over the last few months, even though the company's probably made the most progress in the last 3 months that I have seen it do since I've invested into it, arguably. So yeah, Beyond Meat is getting absolutely hit. Corsair's down 29%. Yeah, obviously these guys have been hit by logistic issues, but I'm still very confident on that one. DraftKings here, which is my new largest holding for the last kind of maybe 6 months. I think DraftKings came the largest holding. Currently down 53% on that one. Well, like Gang, very much. It's growth stocks and small caps have been hit, and then even gambling stocks seem to be just being hit a bit harder than that. But DraftKings have been, DraftKings is one that I'm just keep buying as much as I can, because they've had a very good year. When the company came out with the guidance, and the guidance was 900 million, and I think this year they're going to do 1.3 billion. We're coming into the Super Bowl season. New Jersey's come profitable. Going into next year, it'll be good to hear about other states that are coming profitable, I think West Virginia is one of them that is coming profitable now, or should come profitable if everything's going right. So yeah, I'm absolutely getting stung on that one, but my conviction for it is probably the highest it's ever been. So no panic on that one. I generally I've got so much confidence in that stock. So yeah, then I got a little small play in EHang. That was just a pretty much boom or bust investment. That's very high risk. That's why it just takes up a small position in the portfolio. But yeah, if drones come popular, they will do very well. If they don't, it will probably go down to zero. So that's just a little bit of a small high risk stock that I took on. Fintech acquisition, that's just a SPAC that I hold that should merge with eToro. So we'll see if that happens, but it keeps getting delayed at the moment, which is only a bit of a worry. Same again, it's a bit of a high risk investment, that's why it's only very small. Facebook up 45% on this one. I have been averaging up on Facebook as well on this one. I want to get Facebook a lot bigger. Obviously, when you combine both portfolios together, people ask me all the time, why can't I just combine it two all together? The reason why is there's different combination of averages to add all together, which is the confusing part. So that's why I can't do it all together, and this is probably the easiest way to show it. But yeah, I have Facebook, but when you combine both of those positions together, it is quite a chunky position. So I'm probably going to be buying Facebook more in this account if I can do. But yeah, I'd like to make it ideally one of my largest holdings once again. It is already one of my largest, but probably the largest ideally. Callaway Golf's down 3%. That's been hit a little bit. Pretty happy with my Callaway position. I might buy a bit, but I'm pretty happy on that one at the moment. Hims is down 35%. might buy a bit more of that one, but I'm about built on that one at the moment. But yeah, I still like that one. InMode, I've been averaging up on InMode. It's obviously had a massive share price drop at the moment as compared to the last update, where you'll see, if I just flick here, you'll see where is InMode. It's up 406%. So you know, this one's been hit a huge amount as well. But yeah, still a massive believer on it. Wouldn't mind making it a even bigger part of the portfolio if possible. I mean, these guys have gone down after reporting like the amazing preliminary earnings, if you saw them. Planet 13 down 50% on that one. That's a bit of a higher risk play, but still a little bit more confident on that one than FinTech and eHang, because they are very close to profitability and they're growing super fast. The only risk to it is because of the industry that it's in. Shopify down 14%. This has been absolutely stung. Might buy a bit more of this one. I'll see. It's one of my bigger positions. Not biggest, but one of my bigger positions. Skills down 65%. Not probably going to buy any more skills, just because I have stocks that I like a lot more than skills. It's like Planet 13. You know, I do really like them and I still think they'll work out. But the problem is when you got stocks like Facebook, InMode, Shopify, even Callaway Golf, Hims, DraftKings, even Corsair, Disney, Beyond Meat, Alibaba, you know, when you got all these companies on sale, you know, you just prioritize them a bit more because they are higher quality companies. So yeah, you know, I still like it, but I just can't buy more because I'd rather buy the other stocks out there. Square's been absolutely stung, down 42% on that one. So yeah, that's had a massive fall off. I mean, if we go to the last time we did it, I mean, it was up 13%. 3 months ago when we did this, it was up 13%. So yeah, I might buy a bit more Square. I think that's a great payment company. Obviously, I've got Visa as well. I could even add PayPal in here, but I think I'm pretty well covered with Visa and Square. Tattoo Chef down 30% on that one. That's not done well recently. Turtle Beach is even down 8%. I mean, if we go to, where's Turtle Beach on here? Let's have a look. Last time I did this, Turtle Beach was up 52%. 52%, and it's down 8% now. Yeah, that's how much it's been stung in the last 3 months. Visa up 3% and Disney up 25%. So yeah, so as you can see, you know, it's not even at the point where it's just now growth, small market caps that are being stung. There's like really like, you know, decent profitable companies that have been absolutely stung now, and it's taken a massive hit. And you know, it's not just, you know, just so you guys can see that I'm in the same position. You know, that's obviously taken, you know, we're looking at a 3 months period and you look at the difference in the portfolio right now and how much it's been stung because of the correction that we're in, or certainly a crash for quite a few of these stocks anyway. So yeah, I mean, that's overall everything. I hope you enjoy just seeing the portfolio and, you know, just me being here when things are going up, but also being here when things are going down as well. You know, it's easy to make this sort of stuff when it's going up, but these are the tricky points. You know, you get to see who's actually got a long-term mindset really. And like I said, there's nothing, even though the prices have changed a lot, there's fundamentally in the next 2-5 years nothing's really changed with any of my positions. The only difference is that I've sold Tesla, but everything else I've been buying a little bit more of everything else when I can. Yeah, there's a lot of stocks out there that I want to buy, you know, like on this one, you know, Disney, but I'm buying more of my other portfolio. Maybe Alibaba. Beyond Meat, I'm pretty happy with my position size on that one. Corsair, maybe. DraftKings, I'll just keep snapping up DraftKings for sure. Facebook is one that I like to make bigger. Callaway, not so much. Hims, not so much. I might buy a bit now and then. InMode is one that I'd like to average up on. Planet 13, I would like to buy more Planet 13, but I just, you know, I'm prioritising more high quality stocks at the moment. Shopify potentially, Skills not so much, Square potentially, Turtle Beach even. So yeah, I mean, all them sort of companies. I'm kind of like looking at Fiverr, but I just don't think it's good to add another unprofitable growth company in at the moment. But I do really like Fiverr on the dip that it's in at the moment. These like some PayPal, for example, that are pretty interesting. Even Amazon's pretty interesting. But at the moment, I'm kind of trying to prioritize building up the positions that I already have the highest conviction in, but those are ones that are also quite interesting at the moment. So yeah, I hope you enjoyed anyway having a look at this portfolio and how it's all doing, and just you could see that the hit that mine's had in the last 3 months as well. So yeah, hope you enjoyed it anyway, guys. If you could hit the like button, that'd be absolutely amazing. These videos don't normally do that well. Yeah, I'll see you in another 3 months on the YouTube scene, unless you're on the Patreon. I'll update you in the next month and how everything's doing in the next month anyway, guys. So yeah, I'll catch you all in a bit.